Gold's been around for 6,000 years. If you're a central bank or an institution, are you going to put it into a 16-year-old commodity, digital commodity on the internet? Right now, everyone thinks that the system's robust, but I think that we'll have another bear market.
What do you think would precipitate the beginning of something like that?
You can see gold starting to rip, right? That's telling you warning bells on the economy. It's a very, very, very seldom you see this kind of divergence with gold and the rest of the economy.
So we're now seeing long lines of people outside of gold dealerships to buy gold bullion. Is that a top sign or a signal?
If the everything bubble pops, maybe we get a 80% drawdown like last time. If it holds above 16,000, the bottom of the next bear market is structurally intact. The 2008 world financial crisis was the last ending of the last cycle.
Where do you think we are in the business cycle?
On the verge. It's not just one, it's key macro indicators.
Do you think any assets will withstand a market crash in prices?
Yeah, I know this is not a maxi answer, but the reality is...
Archie.
Willy Woo. This is 3 times in about 4 months.
Archie. Is it 3?
Yeah.
Three? Oh,
this
yeah.
is number 3.
It is 3. This is number 3.
I'm honoured.
3 different places, right?
Yeah, in fact, I think you were the first guy we interviewed. It wasn't the first published. That was Max and Stacey. But you were the first guy I think we interviewed.
Oh, really?
We did a remote...
Yeah, Daniel Batten as well, I think.
Daniel was the first in the studio. Oh.
It was internet.
No, we had Alexandra was the first ever in the studio. That was before Charles came on board.
Yeah.
You were the first interview we ever did, but Max and Stacey was the first we ever published. I wanted them to be first.
Oh, I see.
So, yeah,
Okay,
because
right.
Alexandra was very kind. He came from Paris just to do the interview, and and we did you as a Zoom as well. So yeah, welcome, man. It's a pleasure. I used to watch you quite a lot before I doxed. I'd like to have a chat to that guy. It's like, yeah, it's really interesting stuff.
Yeah, cool. Glad we're here again.
We're in Lugano now.
Yes, that's right.
Your first time?
No, this is, I don't know, like probably the 3rd Plan B conference. Yeah, I think.
You've been 3 times. Well,
I think there's been 4, and this is the 3rd one that I've been to.
Okay.
So they asked me to speak in one of the early ones, and so it's been, one of the ones I think is like super, super legit. By people that can move the needle for Bitcoin. It's great to see a city that's adopting Bitcoin and in partnership with Tether, who's providing the infrastructure framework. You got Giacomo here, it's like really working on building the community, Bitcoin-only startups here. It's incredible, eh? What's happened here in the last 3 years. Every year it gets better.
You said there are a lot of people here doing things in Bitcoin to move the needle. What do you think moves the needle at the moment?
I think it's just, it's not just one thing. It's just really, we're building effectively an industry, new rails for a new asset type. And so right now, just like in Bitcoin in the early days, it was the on-ramps, right? It was the exchanges. How do you actually buy the asset? That's a very simple thing. We tried experimenting with spending. I think it was a bit early. Now we're looking at what else can you do with this asset, So you might call it financialization, but that's got a bad connotation. But really you can think of it as how do you make Bitcoin useful for people who hold it in all the ways it can express itself into the financial system. And so you're seeing the bridge of institutions coming in now, and people from TradFi that are coming in looking at this, banks are coming in looking at this, and what can we do with this? And on the Bitcoin side, it was like, I can use this coin now. I can like put it into a contract, escrow contract, hold my private key, and borrow fiat against it. And so like that's, I think that's one of the low-hanging fruits right now is like being able to use your Bitcoin just like you use your house for a mortgage to, get funding. So that's one of the core use cases, I think. There's insurance products, there's all sorts of stuff. How is grandma going to hold her coins? How are we going to solve the problem for everyday people that like, it's a pretty technical undertaking to hold your coins across. Maybe it's a decade and not lose those keys. You might have to rotate those coins because there's an upgrade. Might be a quantum resistant upgrade coming soon. There's an ongoing thing, and it's beyond the capabilities of everyday, masses. Grandma won't be able to keep up. So how do you build those those technologies and the effective infrastructure such that it's ready for prime time and everybody. And it'll take, it's probably a 10, 20-year journey to make this a full unleashed asset that people can use.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling. Just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money. Well, that tells me that TradFi is now recognizing Bitcoin as a legitimate asset and is starting to build products and services around that. Specifically, we saw since last November, capital markets, credit markets embrace what Michael Saylor's strategy is offering. Do you think that's going to come to consumer markets anytime soon in a scalable way? Because we've already seen some startups. So DeBiFi is a sponsor of this podcast, as I've mentioned many times, I think in our last discussion as well. And so how do you see the development of the consumer side of the credit capital markets embracing Bitcoin? How do you see that developing?
I mean, you talked about Michael Saylor and the Treasury companies. I mean, that's a different thing from, the consumer side. Consumer side, here they're running the experiment of paying with Bitcoin and Tether, and I think it's a bit early, but this stuff has to start, and I think it builds community and it gets the merchants understanding Bitcoin. I just think of it as a long journey, right? I was in a restaurant just yesterday and I paid with Lightning Bitcoin. I was a layer 2, using Blockstream's Liquid sidechain where I've got Liquid Bitcoin. It swapped out through the bolts, went to through Lightning to the Naka terminal, and just as an example, apparently it didn't work. It was like it took minutes for it to work. I'm sitting there, and then long story short, the guy who's just around the corner comes out, tech support, walks into the restaurant. I'm there for an hour trying to resolve it. Turns out Amazon Cloud Services were having a hiccup, and it slowed everything down, and it was like I ended up paying with a credit card.
So you used Bitcoin through Liquid?
Through Liquid on Aqua Wallet, swapped out to bolts, which then bridges it to the Lightning network that went Lightning through to the Naka terminal, which the restaurant had, and the waiter is there rolling his eyes on this technology, right? And I'm like, I'm so sorry. And I'm the customer, but I'm so sorry, apologizing for Bitcoin. So that's the state of the infrastructure right now. It works when it works, but does it work 99.9999, like 6 nines on the end of it % of the time, because you got to get to that level of reliability. And so all the stuff is still in early sort of development, in my opinion. It's not ready for prime time. How do you get it ready? And it's good to do it now because this adoption path is going to take ages. So the consumer side, there's that. On the consumer side, there's, can I borrow against my Bitcoin? I think a lot of people are like borrowing to buy more Bitcoin, which is not, I don't think that's, the point. Just you can hodl, use your coins. not sell the coins and do the playbook of the rich, which is don't sell your asset and use the debt as long as the debt's cheaper than the gain of your assets, you'll be compounding. So those sorts of things. Obviously, we've got retail markets able to invest into Bitcoin Treasury companies. Double-edged sword. I'm sure, like concentrating supply. I think it's a weakness on the system, but it presumably helps bring more capital into the network.
That's what I was going to say. Don't you think these treasury companies will facilitate the development of Bitcoin as a means of exchange? Because we do need liquidity in the channels, right? Where's that going to come from en masse at scale? Don't you think that could be a source for that? So, because the reason I bring that up is a lot of people are lamenting the acquisition of Bitcoin by these treasury companies, citing, consolidation and centralization of ownership as it hits scale. But I'm like, yeah, but then they're going to need to do something with that asset.
Yes.
And what better way than to, put that into a Lightning channel and provide the liquidity, which then makes Bitcoin as a means of exchange so much more feasible and viable. Because that's one of the choke points when you do go to use Bitcoin, is if there's not enough liquidity in the channels to facilitate your payments.
I think you're right there, Archie. Though there's only 4,000 bitcoins on the Lightning Network, and maybe you know more than me. Is there a shortage of liquidity? The thing is, like, a lot of people want yield on their bitcoins, and they do want to put it into something like this. The yields are quite low, right? What is it, 1%, 2%, something like that?
Well, there was some months ago, I think, the team within Jack Dorsey's company reported through an experimental period of 10% yield they achieved.
Yeah, I'm not
I don't
sure
know if that's scalable or sustainable, particularly when people find out.
I think it'd be almost impossible to sustain that. I think it's you find these in these early emerging markets that the yields are really high and then they compress. So what we do, market neutral, getting yield on Bitcoin or US dollars. Presently, we can get 10%. Because the volatility and the inefficiencies in these digital asset markets are so wide. But 2017, it was easy to get 100 to 150%. So you see how that's tapering down across the cycles. So there's plenty of Bitcoins that's looking to fund liquidity if the yield is high and there's enough demand. So there's not enough demand at the moment because
at the moment I see two areas of friction. One, it's actually a burden on a lot of merchants because of the number of times the transactions don't go through, like the experience you relayed. And two, there are a lot of people, Bitcoiners already, there's dormant demand from them that merchants are not able to facilitate, and Bitcoiners simply just give up because they don't, like, even 3 years ago when we were in El Salvador, Walker tried to pay for his hotel bill with Bitcoin on Lightning. They couldn't facilitate $1,000 payment or whatever it was.
Right, yes.
You see what I mean?
Are too low
and people want to pay for the bills, all sorts of expenditure, go out to restaurants and do that. But if you go to a restaurant that says Bitcoin accepted here, but then you go and ask the maitre d' for your bill and they roll their eyes, or you have an issue with liquidity.
That's what we're seeing right now. That waiter definitely was rolling his eyes. And he's frustrated, and you can understand that. And we're like, oh, I'm so sorry, like the restaurant owner as well. And so that's going to take time, I remember what Bitcoin was like 12 years ago, and, we were messing around with paper wallets. Let's roll some dice, create a seed, send some Bitcoin in there. You don't know if it'll work until you break open that paper wallet and send it. And now you got to do it again. So it's just like
it's like a slow loading.
We didn't have hardware
browser.
wallets, we didn't have. It's like putting something in a box. You don't know if that box holding it until you spend it, and then you got to do that again. So it's this stuff takes time to work out, and also the market's not there yet. It'll take time for the merchant adoption. That's very, very early.
It seems when you say that the market will take time, it feels like there's a chicken and the egg situation between merchants, demand, liquidity providers as well. Like, what can be a catalyst to sort of break that interdependency and that friction that exists there? Because, we need liquidity, but for liquidity to come, we need demand for transactions. And for demand for transactions to actually build up, we need merchants to accept. But by the same token, they need liquidity and consistency of acceptance, for the transactions to go through. So it's like all three parties are just looking at each other like, yeah, when you go, we'll come. But something has to break that deadlock.
It's a store of value, right? Like, why did you get into it, Archie?
Well, I got into it for a trade, to be honest. Number go up.
Exactly.
Pure and simple.
Yeah, so trade, then store of value, investment, and then you learn about the asset, and then maybe you go to wanting to support the network. And then you see what happened in El Salvador. It was a solution. Here in Lugano, it's an experiment that is supported by Tether. It's funded by Tether. The city is behind it. There's Bitcoin, facilities, incubation. It'll take, the store of value brings a lot, right? The store of value brings, $100 billion, $500 billion companies like Tether. It brings companies like MicroStrategy. And what are they going to do? They're going to support the network. They're going to support Bitcoin and infrastructure. And so store of value first, payments later.
There is a lingering school of thought that one negates the other, or one should precede the other, or one should be prioritized over the other. I think they go hand in hand, to be honest. What are your thoughts on that?
The thing is, payments is really no-go outside of a very, very, very tiny amount of people who are passionate about the technologies. It'd be like the cypherpunks, the true cypherpunk type out of the developer group. There's only a small amount that are working on a specific thing for freedom money. And the average person just wants to get on with their life, right? So ultimately, it is the number will go up. I believe it's store of value, and then you work on the payments if and when it makes sense. But I think that it's really important to have payments for the safeguarding of the network. And what I mean by that is when, if you look at gold, we used to use gold as payments, right? We used to, for thousands of years we had that. So you take that and you move it to a time like more the industrial age. We had paper notes that was traded for gold because no one wanted to carry lumps of gold. Certainly can't trade gold across, long distances because it's a lot of heaviness to carry. So you get used to this paper, this sort of paper trading for the gold, and it became a sort of a layer two, but it wasn't really trusted. And then you can rug it, right? Eventually, it got centralized into a vault called Fort Knox. All the world traded their money around the gold in Fort Knox, and then eventually you close the redeemability window. You can't trade the paper for the gold, and you've got fiat, right? So you can rug an entire currency, a gold-backed currency, by not using it as a medium of exchange. And that's the same thing here is that, well, as we're developing these big stores of value in these pools called MicroStrategy, ETFs that can be nationalized by a government saying, under stress, saying, we're going to buy all your shares, it's going to be great for you. Now we've got all the Bitcoin. Bitcoin's quite resistant because we can audit it. But the fact is you could create another like dollar backed by Bitcoin. And you can keep this sort of fiat games going on for a long time. Eventually, Bitcoin and gold and a whole bunch of other assets, but it's sort of the same sort of fiat system. There's a centralized party involved. If you have Bitcoin being used by the people everywhere, it's highly resistant to being rugged by a central attack by a nation state or some other party.
You mean perpetuate the fiat games by having a reserve-backed currency, the reserve being Bitcoin, and then just repeating the same cycle that played out with gold?
Yeah. Like, so say if the dollar comes under stress, you start to say, we're going to back it with commodities, we're going to back it with Bitcoin, we're going to back it with a whole basket of stuff to build confidence. But it's a confidence game. Yeah.
Yeah, definitely. You mentioned gold, and there is a school of thought that Bitcoin will demonetize or definancialize assets like housing, for example. And yet we see gold at 27 trillion market cap at the moment, more than 10x what Bitcoin's is. And we're not seeing the effect of definancialization or demonetization of these kinds of assets. So it begs the question to ask, how big does Bitcoin need to get before we even see an inkling of that kind of effect in those kinds of markets?
Yeah, I think it's, big is part of it. I think more important is how old does it need to get? If I'm an institutional investor, if I'm a central bank, it is nation states that are stacking. It's mainly China. You're looking at, do I do Bitcoin or do I do gold? And gold's been around for 6,000 years and it's understood. And you got to get everyone over the line to understand Bitcoin. And even those that understand it debate it. And it's all the properties of Bitcoin haven't been expressed yet. We haven't even had one generation of time with it. So
what do you mean by that? All the properties of Bitcoin have not been fully expressed. Which properties do you mean?
Well, like when the internet came out, what is this thing? You try explaining it to mum. Like, mum, there's this internet thing. What is it? No one could explain it. The internet information superhighway is what it was called.
I remember that, yeah.
It was like, what do we do with it? A web page. What is that? And like, what is a medium? What is that medium? Ultimately, it was, what we see today. It was like from the 90s to, a generation later, more than a generation later, 30 years later, we have social media, we have streaming, we have it's everything, and everyone just knows what it is. But I don't think people would explain it even today. But we just look at it and we know. You look at gold, we know because 6,000 years, it's intuitive. You need to get to that, right? For now, we don't even know where we'll go in 5 years. Like, what's this quantum thing? Quantum resistance? How is it going to behave through that? People don't know what's going to happen really until that happens. And so there's this technology thing going fast forward. And if you're a central bank or an institution and you're looking after, some serious responsibilities, the retirement funds of a whole nation or, the security of your country, are you going to put it into a 16-year-old, is it 16 years old?
2009, yeah.
Yeah, 16-year-old commodity, digital commodity on the internet that's only like, let's call it 30 years old? Or are you going to do 6,000 years of understanding it?
Yeah, so when I make the comparison between Bitcoin and gold, I wasn't asking why isn't Bitcoin as big as gold yet? What I mean is like gold is 10x what Bitcoin is at the moment, and yet we're not seeing the financial effect of a store of value in gold on the housing market that we're supposing Bitcoin will have. For example, people are saying Bitcoin's going to demonetize, or it's going to suck out the monetary premium from assets like housing, right? You've probably heard that before.
That's happening. You
think that's happening?
I sold my real estate for Bitcoin. I was tired of the tenants, and I've talked to plenty of people who have sold and bought Bitcoin. So that's definitely happening because I've experienced myself, and I've met people that have done it themselves. So, like,
do you think that's reflected at all in the market prices? That's my point.
In the market, yeah, it has to, but we can't track exactly. When I see someone add capital to the network, where did it come from? Where did it come from? Did it come from real estate? It's going to be pretty tricky.
So,
is real estate in a downturn, and that's why it's going down, and Bitcoin's like growing as a network, and we don't know why. Everyone has their own reasons. So, I know that it is demonetizing to some degree. How do you measure it? It's a different thing.
Maybe I'm not thinking about it in the right way, but I think you selling your house to buy Bitcoin is just throughput. It's not money that stays in a particular asset because there's, as we know, there's a buyer and seller on every side of transaction, right? So when you sell, someone's buying, same thing happens with Bitcoin, right? You putting money in, someone's taking money out as well. So it's all throughput, and it's just the sentiment surrounding a particular asset as to which price level that transaction, that throughput happens at, right? So I'm like, well, is it possible that actually Bitcoin does go up and we don't see the demonetization, the monetary premium from other assets does not get sucked out because there's a well-established custom that persists. You see what I mean?
No, well, like if you're going to sell the house and you're going to buy the Bitcoin price ultimately is going to go up fundamentally.
Mm-hmm.
These two, but Bitcoin price, if you put a little lens on it and say that ticker price, there's layers and layers of interaction on that price. On the shortest term, it's just traders moving the price around in a tactical trade, liquidating this and this. And then there's mid-term people that are like swing investors. Maybe they're a cycle investor, buy in the bottom, sell at the top, maybe over 3 months. So all of these things superimpose. Then there's the long-term investors. And it turns out long-term investors are the fundamental. Like those things, you can measure them on the blockchain, and so you can measure you can get a sense of the contribution. And it turns out that the cycle tops happen when the longer term investors start to pull out, and then there's an interaction. The shorter term guys come in and they want to ride the FOMO top. But you can see all of that. But what I'm talking about is that fundamental baseline investment, long-term stuff. I just sold my house. I'm going to pack it into this to store value. And you can measure that, right? You can measure that in terms of how that's progressing in Bitcoin. But I can't tell you that came from real estate. I know that some of it did because I sold my house, and some of these other people I've talked to have done the same thing. Because real estate is a pain in the ass. You got to maintain that property. You got to report it. You got to do a whole lot of set accounts, accounting, and all this sort of stuff. It becomes like a business, right?
The analogy that I use to sort of understand that is while the tide comes in and out, there are still waves, right? And so we've got a tide coming in, from capital markets into Bitcoin, but the waves are still sort of crashing individually at the surface level, which is the short-term money, which is not necessarily indicative of the broader trend, the secular trend of capital coming in. Waves can come in, come out, but that's not the focus of what's happening. It's the tide that's the actual focus.
Yeah. And it's very easy to measure on the Bitcoin blockchain. It's called realized cap. You can make an estimate of total capital in the market. All the trading stuff happens on exchanges. Doesn't really get moved to cold storage. Once you move to cold storage, you can make a fair guess that's a long-term investor, and so you can track that very to a high degree of accuracy. And the interesting thing is most people get shaken out on the surface level. 10th of October, Trump tweets, nasty things about tariffs to China, and all the capital markets crash. It was on a Friday. Some of it vented out, risk off into crypto because it's 24/7. Nailed all the altcoins and shitcoins. Bitcoin held up, but it was pretty. But that was just liquidations. There was was
it $19 billion in a single 24-hour period?
Yeah, something.
The highest monetary value for any liquidation period.
Yeah, more than
ever.
FTX, more than ever. It was the number one. I've heard 19, 22, something like that, billion. Mainly in altcoins, not Bitcoin. It did sweep some of that, but mostly it was altcoins because the liquidity wasn't there. But that was all traders playing trader games. And it was not the hodlers in cold storage. I messaged Max Kai, DeBiFi, so how many of your borrowers, these guys that are borrowing fiat, you fronting Bitcoin collateral, how many of them got into liquidation? I said none. It was just another day, it didn't affect the long-term holding, but we can be shaken out by fear of the sort of short-term stuff.
Do you think that's extremely bullish for Bitcoin that yet again we've had a huge market reckoning?
Mm-hmm.
Alts did what shitcoins do, got completely wrecked, and meanwhile Bitcoin's virtually recovered.
I think so. I mean, the institutions are coming now, right? And it's important they see this. I don't think institutions understand that altcoins are technology. They're like your startup that one day hopes to be on the NASDAQ. And on the other side, you have a monetary asset that's going for the size of the world economy. These are two different things.
Well, we see some of them now dabbling in the so-called treasury companies of these alts, and it's astounding to me that they're actually getting up, like
yeah, because
trying to replicate the same model.
It's because they're all in for the short-term trade. Like if you're going to be approached to allocate capital into this whatever DAT, and they have a PIPE, which is the private placement opportunity. You go to all the crypto investors. Oh, this is like 2017. I can like front some money and then wait a bit of time, and my tokens unlock, my regulated US securities get sent to me fully legal, and then I can dump them onto a liquid market. And so I think that the DATs are really very short-term time frame people playing this market in a bull. Playing chicken with a freight train. If a bear market hits, you're going to get killed, and everyone who's investing in it knows it. And so that's why they're getting filled. It's from the crypto investors that played the same game that's been played since 2017.
What odds do you give a company in the altcoin space, a treasury company, so-called treasury company, emerging and becoming? Well, it's not going to be the next strategy, but could be the next meta-planet, for example, of scale.
Well, the thing is, I'm not even sure meta-planet's going to be around. We've got to see a bear market come, right? If we have a solid stress test, like let's see who's standing.
Yeah, but okay, that's interesting. I saw Dylan McClare, who's like, I think, I don't know what his title is, but he works there. And I think he leads their corporate finance activities there. He posted something in the order of, their liquidation price is like $808 Bitcoin. Like that's not going to happen. People, they don't really have any debt. It's all just been share issuance.
The thing is, the liquidation price keeps changing because in MetaPlanet they take on a debt, right? Like
they don't have much debt.
Not at the moment, but the thing is, their structure is that if they don't have debt near the top of the market, then they're good. So it's very much how much risk they take. You're really trusting the operational team, who are pretty sophisticated, to play this well. But they've taken a couple of tranches of 300 million. Instantly, you have liquidation issues. If the market turns on them and they can't do their synthetic ATM, basically re-transport capital back into MetaPlanet to pay off the debt as people are buying the shares, if the market turns, that whole synthetic ATM machine stops, and they're holding the debt, and they will be partially liquidated. And if that happens, then there's some liquidation.
Yeah.
And the question is if you don't know, there's no guidance on when the next tranche of debt will be. It went relatively small, then it went 300 million. It was a big risk. They were right on that. It wasn't, the market hadn't turned. So every single treasury company has different details, and you need to look into it and see how does that work in a stress test. And I think MetaPlanet are quite sophisticated. I saw them by the bottom of the dip and unload that 300 million, and that actually turned around that particular dip a few months back. And so, I haven't had time to look at everything. I've just looked at a few, and each one has different risks. So these digital asset ones with altcoins in it, I haven't looked at them. Maybe they're robust. Maybe they can sell, hedge, whatever. But will they be able to do it? Are they going to do it? So let's see what happens. No one really, at least only a few people saw some of the what happened in 2022 as everything unraveled. Right now, everyone thinks that the system's robust, but I think that we'll have another bear market, and if we get a stress test, let's see what breaks.
What do you think will precipitate another bear market? Because at the moment, we haven't really had any kind of euphoria in Bitcoin. It's just been, leg up consolidation 3 times over now since the bottom of the bear market. And so that, I guess, indicates to me that there isn't any kind of excessive exuberance, confidence, rather optimism about the future. And so I don't personally see a reason for the kind of bear markets that we've seen in the past. But how do you see that, and what do you think would precipitate the beginning of something like that?
I think that where we are in global macro, and people talk about the everything bubble.
Mm-hmm.
I think if that turns and the everything bubble pops, and the last time was 2008, before that was 2001, the dot-com crash, then everything will be stress tested. And I'm not saying just Bitcoin and crypto, I mean world financial markets. Liquidity is going to pull out of the system, buy-sided liquidity. No one will want to buy. They want to run to safety. It's called a flight to safety. Everyone runs to the US dollar, and then gold afterwards. You can see gold starting to rip, right? That's telling you warning bells on the economy.
It's been happening for almost 3 years now. So gold and Bitcoin bottomed around about the same time. I think gold may have preceded the Bitcoin bounce. Maybe they happened at the same time. I can't quite remember. But they've been rising.
Yeah, because like gold's and it's in a divergence, and very seldom. It's a very, very, very seldom you see this kind of divergence with gold and the rest of the economy. And last time was the year 2000, before the dot-com crash. Before that was 1971, the stress test that created fiat. And before that was 1929.
So we're now seeing long lines of people outside of gold dealerships, or whatever they're called, to buy gold bullion.
Yeah.
Is that a top sign or signal? Because
we're
suddenly seeing quite a pullback, right?
Yeah, I think gold's going to cave as well, like it does in a flight to safety. If we have any structural sort of breaking of the TradFi markets, it'll be like 2008, a little bit like that, a bit like 2001. Well, 1929, well, I don't think it'll be 1920. 1929 was the Great Depression, everybody. Right, the markets are quite different now, but that's what gold's telling you if you're a gold trader. So,
do you think gold will be impervious to?
No, it'll pull back. It'll pull back. Gold. I got my ass handed to me in 2008. I was long to the gills gold. It was the right bet, but you forget that when the whole thing unravels, everyone runs to the US dollar. They sell everything, unwind all their positions. It's called deleveraging. Dollar goes to the roof, in relative, the Dixie goes to the roof. Gold strength relative to other markets. Dollar strength relative to other markets go through the roof, meaning that you can buy more with your dollar. And then, gold was the first to recover, and it went on all the way out to 2000 to the 3 to 4 year perpetual bull market. So, gold is the right asset in this time. And we want to see how Bitcoin performs. It's a really good test because now we've got institutions here and we've got global macro investors and traders in there. How does it perform? Is it going to perform like the NASDAQ, or will it perform like gold? Because we say it's got the properties of gold. In my opinion, it's got more. It's what gold wanted to be. But it takes time, 16 years is not long enough.
So what do you think? Do you think there is a difference between a reaction to the crisis and a response after the crisis has emerged? And do you think that we'll see any kind of difference to what happens with Bitcoin? Because Bitcoin's very liquid, so it's prone to being liquidated in a crisis, right?
Mm-hmm.
But then, like the 6 or 8 weeks afterwards.
Well, I just see Bitcoin as going into a normal standard bear market. Like everyone thinks it's strong, and it is. And the investors are strong, like institutional, MicroStrategy, these types of companies are holding it. So there's strength there. But if we get a pop in the global asset bubble, then that impact will pull it down, and that maybe we get a 80% drawdown like last time, and it's like just another 4-year cycle from the view of being inside Bitcoin. But from the view outside, it's a totally different thing. Look, it just did its normal thing against a stress test. So
80% from these levels would be catastrophic on the charts, though, right? It would look like the entire 16-year chart is breaking down. It would, because we're talking about going back down to 80% from here would be about $35,000.
If it holds above 16,000, the bottom of the next bear market is structurally intact because it's higher than the last bear market. And we shouldn't look at tops either. Tops are very unstable. The bottoms are very much closer to the fundamental investors. Generally, it doesn't drop below 20% of the capital stored in the network. It's very close. The tops are sometimes 3 to 5 times more than the capital in the network. So at the bottoms and how that performs, if it drops below 16,000, then that'd be a little bit freaky, you know. But that can happen. It can rebound. Yeah.
You posted recently that Bitcoin has been operating thus far with 2 overlaid cycles, the Bitcoin cycle and then the broader monetary or macro cycle.
Yeah.
Where do you think we are at the moment with those 2? And do you think one is taking precedent over the other?
I talked about 3 cycles.
Okay, I missed that.
There's a halvening cycle, which is we all know the halvening, the supply shock. There's a 4-year liquidity cycle, which is central banks printing money on a 4-year cycle. And so that's been Bitcoin for 16 years. And then the last cycle was the business cycle. And Bitcoin was invented off the back of 2008 world financial crisis, which was the last ending of the last cycle. And those are the 3. And we've never seen the business cycle. And this is what I'm alluding to in this conversation. So,
where do you think we are in the business cycle?
On the verge.
On the verge of breaking down?
Yeah.
Interesting. Okay.
You know, the economic indicators have fired. Henrik Zeberg does a lot of this work, and I've seen his data and his signals, and it's very compelling. It's not just one; it's key macro indicators that all point to this. So the question is when, not if. And this was very clear to investors in 2007 as well. The indicators were clear. Gold was starting to rise. The numbers were looking bad. People were starting to put positions on banks. It wasn't a surprise, actually, to a lot of investors. It took the rest of the world by storm because everyone was sleeping at the wheel. The whole thing was over-leveraged.
I remembered 2008 and 9 market crashed through the property cycle in the United States. The market crashed in property as well. And it took some time before the policy response to the market crashes actually took effect. And from my recollection, it was something like an $800 billion bailout, which was such a fantastically enormous sum at the time that when they later asked Obama's advisor, how'd you guys arrive at that number? They said, we just picked a number that we thought would instill confidence. So I guess they didn't want to go to $1 trillion back then. And, the meme that Lynn Alden has been perpetuating, nothing stops this train. And so the assumption that what I guess all of us Bitcoiners have bought into was quite literally the policy response to a crisis will be the same. They will print out their way out of it. There is no other policy response that they will be brave enough to take. But between the time of recognition of a crisis, markets, which is what I was alluding to before, there'll be a market crash, and then it's the behavior within that period. And then there's the response, the policy response, and then the asset and market response to that. And I'm wondering, do you see a differential between how various assets will respond during that crash and then how they will respond to what we believe is an inevitable policy response of printing more money?
I don't understand the question, actually.
I'll ask it more simply. Do you think any assets will withstand a market crash in prices?
Yeah.
Which ones?
Fiat, US dollar, Swiss franc. I know this is not a maxi answer, but the reality is, because when we talk about Bitcoin, is the thing that's the win out of this. We're talking over a period of 10 years. Short-term volatility is what it is. Like, what was it? It was like was it a 2-3 month pullback in gold and the flight to safety, everything unwinds. You got to wait for this whole thing. It's just like what happened a couple of weeks ago. everything's dumping, and then it bounces back and mean reverts. So the smoke's cleared. It's still clearing. It takes 1 month to structurally repair that. And so, like, in the short term, if you want to do timing games, you be in dollars and you try to buy the bottom, like buying the bottom of the COVID dip, you know. But this will be slower, right? Because it's global macro. But nothing like the short term, the dollar, Swiss franc, you know, these currencies that are considered safe, right? And then after that, you know, buy whatever you want, you know, whatever you understand, whatever you've done your research on. For me, it's Bitcoin because I've done the research on that.
Is the British pound a shitcoin?
Well, fiat is what would you call it? Yeah, it is fiat's a very interesting shitcoin. You know, it's we'll call shitcoins going to zero, right? And of course, that's inevitable because structurally they're designed to debase roughly 7% per year. But it's a very stable shitcoin, no volatility. So it's a shitcoin it's a shitcoin married with a stable coin. You know, that's what fiat is, and that has use. That is use in these, like, because I'm not worried about this debasing to zero over the next 2 to 3 weeks or next 3 months or even the next year. I'm worried about the markets crashing 80% on me or 30%. Don't hold this, you know, stablecoin, shitcoin, fiat, for the course of a decade. I mean, everyone knows that, but it's the time frames. You know, I think that's the misunderstanding in most of the ecosystem is the time frames. Like when you said up and now it's down, well, the time frame, you know. So just understand the time frames, and everything has its property. And Bitcoin's great for a long-term investment, not short-term. Short-term, if you're terminally ill and you're like 1 year to live, you know, I would say fiat is the best store of value for you because the time frame is best suited for you. But if you're beginning your life, then that's different. You've got, you know, what's the time horizon?
You're an investor and a trader, and one of the tools for people trading in the crypto Bitcoin space has been stable coins. I've never personally used them, but one of the things I'm really fascinated by is the transformation of Tether, the US dollar T, from chief Bitcoin FUD material for a lot of critics of Bitcoin to suddenly just becoming the most dominant by a long margin, and just sort of taking over. There was an inflection point between Circle and Tether at one point, probably about 3 years ago. And they just went in completely opposite directions in terms of growth. And as someone who hasn't used it, I'm not an analyst either. I don't understand what happened. What precipitated that change in the direction for both stable coins, the Tether one and the Circle one?
I think Tether had a bad name because there was, I don't know if it was funded, but there was a handle on Twitter that was throwing FUD. You know, unbased FUD at Tether. And there was the conspiracy theory that Tether was printing tokens, stable coins to buy Bitcoin because the AUMs moved together, you know, the market caps were moving together. So, you know, that had been going on for years and years and years. And I think 2022 was the acid test where all of the DeFi stuff started melting down. FTX started breaking. Everything started to break. And Tether proved it was good for the money.
They had a massive number of redemptions in a short space of time. And I remember Paolo live tweeting, no sweat, doing it no problem.
It was the biggest run on the bank in history. I think the next one was Wachovia Bank, and they went bust. They survived it, no problems. You know, because we know some of the team there, and we were like going to have a follow-up call, but it was like, oh, I'm sorry, we can't do this because we're busy, all hands on deck doing redemptions, and no problems. You know, I think one of the founders was like saying, oh, I wish they would redeem back to zero so they know that we're good for the money. They're getting pretty tired of this bullshit. And so they didn't redeem down to zero, but they got their chance to show that it's good. They got the stress test, and I think things started to build from there. So, and you know, the amount of stuff that they weathered to get to today. There was so much thrown against them. Accounts got shut down on them. Their bank, Deltec, really went on a limb to help them to their detriment. Actually, it was through their strong relationships that got them through. And so, hats off to them that they've ridden that journey and survived everything. And you don't get to that success just through a smooth road. I don't think any company does. And so they've gone through a hell of a road. And yeah.
You mentioned acid tests, and I think the 4-year cycles and the bear markets have been something that has almost acted as a stimulus for Bitcoin to become stronger through each bear market.
Mm-hmm.
But I'm going to say, it's going to sound funny, but there's a kind of risk in a multi-year bull market for an accumulation of many, many risks swept under the rug until such time, kind of what happened to the US property market and global property markets in that respect. And then suddenly the tide sort of going out as well, because people just think, oh, the cycles are over. It's okay. We can take excessive risks. Yeah, we're just going to go on a multi-decade run here because of what we believe in Bitcoin eventually becoming. And you were alluding to before buying the tops with these Treasury companies as well. And so if something played out similar to what happened with the gold ETF approval, where it just went on like a 10-year run and then almost a 10-year bear market, what happens to the Bitcoin ecosystem then?
Oh, I think it would be a good test, It's a long test, but, the people behind Bitcoin are pretty strong. I think the tourists will leave. The people who are... It would probably be very healthy for the ecosystem, actually. It'd be very healthy, yeah.
You think a prolonged bear market would be healthy for the ecosystem?
For the Bitcoin, the network. Not Bitcoin for the investor. We probably lose adoption, and we'd lose like decades of whatever. Adoption only happens when number goes up, typically. Yeah.
Yeah, I think it would be catastrophic, like borderline critical, if we had almost a decades long bear market.
Yeah, you might be
Look,
right.
everyone's forgotten about gold until the last 2 weeks. Retail suddenly woke up, and it's only because sovereigns are buying, right? Sovereigns are buying for strategic reasons.
Yeah.
But
they've woken up because of the last few weeks of it, but they've been buying since last cycle.
So sovereigns have,
yeah,
sure, but retail has just woken up. And when I think about Bitcoin adoption, for sure, institutions are a part of that. But my heart is in retail adoption. I want retail consumers, citizens,
me too,
to invest. And I'm like, so when I think about it, I'm like, okay, there'll still be capital allocation from institutions, investors, traders, all that sort of thing. But I just think all that retail momentum will be sapped away. I don't think it can survive such a prolonged bear market. Like we lose so much momentum in just a 12 months drawdown, right? They don't come back for another 3.5 years after that.
I think you said it though, with gold. They've come back in over the last few weeks in gold. Bitcoin can go away for 10 years, and the hardcore Bitcoiners will be around. And I know a lot of Bitcoiners will be really happy to buy those Bitcoins, really like talking to Brad Mills the other day, right? He's like...
Irrepressible.
He's like, it's like, oh my God, Bitcoin at X price. Or rubbing his hands together. So what can I mortgage? So we have a lot of people. Like Adam Bax put in a bid on Bitfinex or one of the exchanges to buy up all the available Bitcoins at
zero, 1 cent, 1 penny.
Yeah, something. And I think someone else was it Whale Panda, said I'll do 2 cents. I don't know, something like that. But all it'll take is for the price to run up again, and everyone will be back. I think it would survive 10 years. It would slow the adoption for sure.
Yeah, I'd have to shut down my account too.
Yeah.
I'm not posting through a 10-year bear market.
No, no one's going to be watching anything
Tumbleweeds,
about
man.
that. We'll just walk away for a while and then it'll be
Yeah.
back. It'll come back, you know.
The Bitcoin archive has been archived. Willy Woo, thanks again. Interview number 3. We're very conscious of your time and want to respect that you've got other things to do as well. But it's always a pleasure to have you, and thank you for making yourself available again.
Absolutely, Archie. Enjoyed it.
Thanks, bro.